What's up, guys? Today, I've got an amazing episode with Phil Rosen. He is the co-founder and editor-in-chief of Opening Bell Daily. In this conversation, I break down a bunch of ideas that are unique. You will not find anywhere else. These are ideas that I've never shared with anyone ever before, but you're going to get the first look. Phil and I talk about Bitcoin, how it crushed everything in November of 2024. We then ask the question, what is going to outperform Bitcoin in 2025, or will it be the actual best asset? We then get into Trump, all the policies, why Bitcoin's going up, and we even start talking a little bit as to why this generation loves risk, volatility so much, and whether risk has been removed from markets. This conversation is going to make you think more critically. It's going to teach you a bunch of things that you've never heard anywhere else before, and it is going to make you question whether I'm right or wrong on a number of subjects. So let me know in the comments on that as well. Here's my conversation with Phil Rosen. All right, Phil, what's the first topic?
We just saw Bitcoin's second best month of the year. It gained 39% in November, and that was just behind the 45% it saw in February, which is when the ETFs launched. And we right now are riding the Trump White House, the launch of the ETF options, and a lot of Trump's cabinet nominees are pro-crypto. So how much of this momentum do you think is sustainable?
Are you not entertained? Right? If you think about what's happening right now, sideways summer is over, Bitcoin starts to go up. Weeks ago, months ago, you and I talked about this. Sideways summer lulls people to sleep, and then you get the explosion. People can't psychologically wrap their head around the fact that Bitcoin was $69,000 on November 1st. Now, at the beginning of December, it's almost at $100,000. What happened in the month of November is that Trump won. People realized that there was going to be pro-crypto policy, and then there's a reflexive nature to Bitcoin. And the more that it coiled all summer long, remember when it was just trading and trading and trading in that range? It's coiling, it's coiling, it's coiling. It's like a spring. Let that baby loose. And here we go. Now, what I do think is interesting is it's coiling again right now because it's been trading between 95,000 and 99,000 for like a week and a half. And so the longer we stay in this range, it's coiling and coiling and coiling. And when that spring gets loose over 100K, this thing's going to fly. And so ultimately, what you really saw was investors said it's time to invest. Trump was a part of it. Pro-crypto policy was a part of it. The price going up and the marketing that comes with that was a part of it, right? Seeing that there was now other nation states interested in buying Bitcoin, seeing MicroStrategy buying Bitcoin, seeing some of the miners say, we're not going to sell the Bitcoin, we're going to buy more of it, seeing MicroStrategy kind of fast followers or copycats pop up around the world. That's part of it. But all these data points line up and investors are sitting there saying, you know what? I better buy some of this. And they start to invest a little bit. More buyers and sellers, finite asset, band price goes up, more people are interested. They start allocating capital, it goes up faster. We're now getting into territory where we've seen 10% days in Bitcoin. We're not talking about $100 billion market cap coin. We're talking about something that's almost $2 trillion. It's crazy. But I don't think it's anything yet. Just wait to see what happens in 2025.
So what's crazy about how well Bitcoin did in November, in the last week, there was actually almost $500 million of outflows from Bitcoin ETFs, so digital asset products. How much of this great news for Bitcoin, can we overprice it in? Is that even something to consider?
Bitcoin is underpriced. It's undervalued today. Why is that? Because if I said to you, what is the value of the strongest computer network in the world? And you said to me, $2 trillion, I would kick you in the shins. I would tell you, stop it. The strongest computer network in the world is worth $2 trillion. There's individual companies that are worth more than that. This is crazy. It's obviously still undervalued. Now, what is it worth? Nobody knows. Should it be worth 5 trillion, 10 trillion, 20 trillion? I don't know. Somebody smarter than me will figure that out. Really, the market's going to figure it out. But $2 trillion is too low. On top of that, if I said to you, gold is a $17 or $18 trillion asset, we have invented something that is more portable, more divisible. It's cheaper, it's faster, it's more secure. No one can confiscate it from you. Anyone can buy it. You don't need to physically store it. All these things. And it's only worth about 15% of gold, you'd say, stop it. Kick somebody in the shins again. You'd say, no, it's obviously going to be worth at least gold. And so that's a pretty big gap. There's a lot of room for Bitcoin to close on gold. And so I just think that any way you slice the macro picture of Bitcoin, it is undervalued today. Now, the hard part for people to wrap their head around is that people don't think of the macro value. They think of the micro, the day-to-day, the week-to-week, the month-to-month, and they say to themselves, well, it was at 100, then it went to 90, then it went to 98. Oh my God, is this the big crash? Did we top out? Is it going to go to 50? Is it going to go to 60? Who cares? It's going way higher over the next decade. And it's because ultimately the value of this network is not currently being exhibited in the price. And so in the short run, you have this very weird dynamic, the voting machine, as Warren Buffett would like to call it. But over the long run, you get a weighing machine. And so what we are going to end up finding out is that Bitcoin today was undervalued compared to what the market thinks it's actually worth in the future. The beauty of Bitcoin is that they ain't creating more of it. So a lot of stock, what ends up happening is you have 100 million shares and it's trading at $1. Okay. And then all of a sudden the market cap goes up, but it's because they created a bunch more shares. So it's dilutive, but they're also creating more market cap. Now, of course, there's a lot of nuance in terms of could it make the share price go down, all that kind of stuff. But in general, there's a lot of things that you can do with a public stock that you can't do with Bitcoin to manipulate that market cap. Bitcoin is a very simple supply-demand game. If there's more demand for a finite supply, the price goes up. If the price goes up, the market cap goes up. And what we are watching right now is that there are pools of capital that previously did not own Bitcoin that are now saying, I need to own Bitcoin. And they're going and they're buying Bitcoin. When they buy Bitcoin, the price goes up. When the price goes up, more large pools of capital say, oh, when this was a $200 billion market cap, I laughed at it. Get this little nonsense out of here. These kids on the internet, right? They're trying to kick me in the shins. Get out of here. But now it's 2 trillion. I might need to buy some of that. I can actually put $20 billion into that. No problem. There's a publicly traded company that's literally done that. And so when you see that, you start to say to yourself, Bitcoin gets less risky the higher the market cap goes. Very few assets in the world that occurs. And so then ultimately begs this question of who's next? What are the big pools of capital? When the first big insurance company comes out and says, we have decided to allocate $2 billion to Bitcoin, every other insurance company is going to say, well, we should think about it. I recently listened to a podcast episode with Mark Rowan, one of the co-founders of Apollo, and he also started an insurance company. He's not a big crypto fan, right? He kind of plays the game of like, I'm not really interested in that stuff. I don't know anything about it. Bitcoin's interested in him. And I'm willing to bet that insurance company is going to hold Bitcoin at some point in the future. So will every insurance company. I was just recently talking to somebody who's very well known Wall Street researcher. They're currently telling clients 60-30-10. Sounds a lot like 60-40. 60% stocks, 30% gold, 10% Bitcoin. I don't hear bonds in there. I don't own any bonds. I'm not interested in that. It's a losing asset. TLT's down like 30% over the last 5 or 6 years. So you start to think of this, you're like, wait a minute, hold on a second. Is Bitcoin going to replace bonds? That sounds crazy. But then you look at MicroStrategy. A lot of bond investors seem to be trying to get exposure to Bitcoin. Is that the canary in the coal mine? Because if so, Bitcoin's undervalued. Given enough long enough time frame, it's going much, much higher. How long is it going to take? I don't know. But I just think that a 40% performance in November obviously catches a lot of people's, kind of attention. It's up 150% in the last year. It's up 130% year to date, give or take. And so a bulk of that came in November, right? A big portion of it. What's December going to do? December, during the year of a halving, tends to be pretty good. If you go back to 2020, when Bitcoin broke 20K, every day it was adding $1,000. I remember December 25th hit 25,000. On December 26th, it hit 26,000. You're like, yo, we are in a simulation. This is crazy. December 30th, 30,000. You're like, literally stop playing with us like this. But think about going up $1,000 a day with an asset that's only $20,000, $25,000 in price. So from a percentage standpoint, it's pretty healthy and doing it every day. When this thing moves, as we saw in November, it can really move. And so there's people now like, oh, we're going to break 100 by the end of the year. Like, you're real courageous, right? You're basically predicting a $3,000 move in an asset that's worth 100. So that's not very impressive. But now I'm starting to see people say, well, what if it's 120 by the end of the year? Again, I don't know what's going to do. I'm not predicting anything. I'm out of that game. But if this thing hits 120 by the end of 2024, you're going to have every single dude on Wall Street getting a phone call from somebody saying, what the hell? Why don't we have exposure? And guess what you do on Wall Street? You listen to your clients. If they say they want something, you want the fees. You want the AUM, right? You want all that. So you go and you buy it. And when they start buying, price goes up, market cap goes up, becomes less risky, more people buy it, more clients call, and here we go.
So something that's interesting as a journalist and a reporter, I get a lot of pitches about covering different parts of the market, different stories, interviewing executives, and that follows the market. So when people want to talk about Bitcoin, that usually happens when Bitcoin is going up. And then when Bitcoin's going down, people don't want to talk about Bitcoin. This is the most pitches inbound I've gotten ever in the last several years. And everyone just wants to come on, do an interview, talk about where they think the price is going to go.
Fools.
Yeah, well, maybe.
No, fools. How do you predict an asset like this?
Well, it's easy for them to do an interview because they just say it's going to go up.
Of course.
Yeah.
But that's actually the best answer. It's just like, it's going to go up over time, which is a bad answer, but it's the best of the bad answers, right? But once you start trying to pick prices and stuff, it's really hard because there's not cash flow. There's not all these different components to it. But I'm willing to make a bet with you that whatever the number of pitches are you're getting right now, I think that we're going to be able to 5x that before the end of 2025. Because Bitcoin historically has had these blow off tops. So right now we're 40% a month, right? Like, hey, here we go. But usually the market doesn't top out until you get kind of 8 to 16 months after the halving. We're starting to get there. Kind of end of Q1, beginning of Q2, maybe into Q3, somewhere in that range, right? Kind of that 9-month period. Man, when the price starts going up, $5,000, $10,000 a day.
Oh, the pitches will flow in.
You may get, I really believe this, you may get more pitches in a day than you're getting in a week right now. Because everyone is saying this is the talk of the town. It's just, you don't see this very often. NVIDIA is another example. That thing went parabolic. Every single person all of a sudden, we're like NVIDIA. We're not like NVIDIA. We did this. We did that. We're a customer of NVIDIA. We are an investor in NVIDIA. Our founder one time worked at NVIDIA. My brother's cousin's mother's girlfriend used to work at NVIDIA. Like, it's crazy. But everyone wants to be part of the story.
I think something interesting too is that the story has never been this compelling. And that's part of I think a lot of this is political as well, because you have the first ever pro-crypto White House, and you have Gary Gensler of the SEC leaving. And that makes Bitcoin, that pretty much gives Bitcoin every green light imaginable. And I'm having a harder and harder time finding the risk. So what do you see as like, okay, this is the thing that could derail Bitcoin?
I don't think anything is a fatal risk, right? The whole beauty of decentralization is that you have such a degree of risk mitigation that you are basically solving for it's not going to go to zero. Now, that is not unique just to Bitcoin. I also think that there's a lot of crypto networks that in general, you have bag holders. So it's kind of like, use this as an example. In a public company, if you have a bad company, eventually they declare bankruptcy. The shareholders don't do that. The executives do. And they say, it's over. And somebody's there to wave the finish flag, right? And say, it's done. There is no such thing of that in the crypto world. So there are people still today holding some random altcoin from 8-10 years ago that just went to zero, but it never actually went to the price of zero. You probably can go somewhere and trade it for 0.0001 cent because there's somebody out there that still holds it. And so think of this as like thriving or failing. A lot of these networks will fail, but people will still hold the token. And so again, what is the risk? It's not actually fatal. What you're looking for is what are the risks that the price is going to go down, that people will stop using it, et cetera, right? And so I think on that front, some of the biggest risks to price are some of the strongest narratives today. Something happens to MicroStrategy. What is seen as a strength today can very quickly become a big weakness because there's concentration of trust. There's concentration of enthusiasm. And so when you take that away, you get the opposite effect, right? I also think that there's a lot of questions right now in terms of risks about some of these public companies that are beginning to get more interested. Tesla, we've seen in the past, they sold some of their Bitcoin. Bitcoin went down, right? So not just a MicroStrategy, but the miners or other companies that hold, they all start to sell, obviously seen as a risk to price. I think that there is still, although getting smaller, a chance that you could get some sort of regulatory action where everyone understands Bitcoin is through the threshold of, is it a security? Is it not a security? It's not a security. But if the United States really, 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 really needs Bitcoin, it really looks like those ETFs that you got there. Wouldn't it be nice if that Bitcoin became ours? Hey, MicroStrategy, that Bitcoin you got there, wouldn't that be nice if that became ours? With like the signing of a pen, the United States could own millions of coins. I think the ETFs now have 1.1 million. Sailor's got 400,000. The US has already got 200K. That's 1.6 million right there. I'm not saying this is going to happen. I think that it is a very, 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 very small, near 0% chance. But still there's risk, right? And so in a weird way, if Bitcoin became so highly successful that every country around the world wanted it, well, we always think in the Western world terms. And let's say that you've got the faith that the United States government is not going to do that. Do you think there's another government somewhere in the world that's going to do that? Hell yeah. Right? So again, we always talk in terms of the United States, but then people say, oh, the US isn't going to do that. Okay. I can rattle off a laundry list of other countries that people will think have a high probability of doing that. And so you get into this game of like, okay, well, if some random country that no one can point out on a map does it, who cares? Bitcoin doesn't care, price doesn't care, whatever. But there's some countries that if they did it outside the United States, people would care, right? We saw China as an example, kicking out all the miners in 2021. Again, they affected the hash rate, but that had a pretty profound impact. Bitcoin went down 50%. So it depends on what the countries are, what they're doing, all the nuance, whatever, but there's risk to price. And the last thing that I would say is Bitcoin in bull markets is a race between the influx of speculators being converted to long-term holders. So price goes up, speculators show up. Price goes up, speculators show up. Most people buy Bitcoin for the first time because they think they're going to get rich. Fine. That's how economics work. That's how free markets work. It's how personal incentives work. At some point, they get converted from, I'm going to get rich, I'm here to speculate, to I'm a hardcore long-term Bitcoin holder. No matter what you tell me, I'm not selling. Some process that happens there. Let's say that process is 6 months. I think maybe that's a fair kind of average. Takes 6 months or so, maybe 12. If the bull market lasts in 2025, anyone who buys after March of 2025 will still be speculating at the top of the bull market. They haven't had time to become a hardcore holder yet. So as that price turns over and starts to fall, some portion of those people sell. They're not convinced yet of Bitcoin. They're speculating. And so what you actually want to see is, if you could ideally draw it up, you'd want tons of new people to show up before the bull market. But that's not how price works. So at one point in 2021, 50% of Bitcoiners had shown up in 2020 and 2021. 50% of all holders were new in that bull market in the up phase. They never lived through a down phase. A good portion of those people are still around today. Not all of them. Some of them washed out. Some of them sold. That obviously helped, draw the price down. But you have to also try to figure out, how do you go from speculator to long-term holder? How do you compress that time frame? There's more information available today. There's podcasts, there's blogs, newsletters, TV coverage, friends are talking, there's all these things that are helping, but it doesn't happen overnight. And so that is a risk, is that you get such a rush of people towards the end, through a bull market, that they're not long-term holders yet. And so when that price turns over, they just sell. And so I always, keep asking my friends, what do you think the financial advisors are going to do? You think that they're going to become hardcore Bitcoin holders? Some of them, but the majority of them are going to buy it. They're going to FOMO in Q2 2025 after we're already at, whatever price, because their clients are calling them being like, you moron, you told me not to buy this thing and all my friends are getting rich. They're going to say, fine, I'm wrong, buy it. It's going to peak, going to start to fall, and they can't wait. They're sitting around the fireplace at night, all night, smoking a cigar, waiting for this thing to turn over so they can call their clients and say, hey, I'm the professional. All right, guy, why don't you stick to making the money and I'll stick to investing the money? And they're going to sell it. It's going to push the price. And so it's this weird dynamic of just like speculation is needed because it brings in capital, drives price, all that kind of stuff. But if they don't convert to long-term holders in enough time, you get the drawdowns.
Yeah, I think it's interesting to think about how Bitcoin has become less risky, even though the price has gone, as the price goes up, it gets less risky, which is unique to Bitcoin. But that risk appetite has really exploded in November, pretty much across the entire financial markets. The S&P 500 just had its best month of the year when Bitcoin had its second best month. And the Russell 2000, which is the small cap index, had an 11% gain in 1 month, which is unbelievable because that's a fairly risky corner of the market, which is typically not advisable to be piling into. What's your sense of the this sort of growing risk appetite? How much of that is driven by, let's say, the next Trump administration? People think markets are going to go up, or what's your read on this?
Today's episode is brought to you by Ledger. Ledger is 10 years old, and they are the most trusted name in crypto security. With over 7 million users and 20% of the world's digital assets secured, Ledger continues to lead the way in protecting your crypto and digital ownership. Now, their latest devices, Ledger Stax and Ledger Flex, feature the world's first secure touchscreens. They make managing your assets easier and safer than ever. They're really cool, and they're easy to use. Plus, the new Ledger Security Key app offers a secure alternative to traditional passwords, which enhances your digital security. Now, Black Friday's coming up, and everyone's looking for a good deal, and Ledger's got you covered. You can upgrade to Ledger Flex and get $70 in Bitcoin, or you can save up to 40% on select Ledger Nano wallets and accessories. This offer is valid through December 5th, so go hurry up while supplies last. Now, don't wait. Go visit ledgerpomp.com. That's right, we got a custom URL. Ledgerpomp.com will take you to the exact page you need to go so that you can go ahead and get a great deal. Ledgerpomp.com. Put it in your memory and go visit it today. Ledgerpomp.com. There's a song, I think, by Mac Miller called Donald Trump.
Yes.
And he talks about Donald Trump is rich. And Donald Trump is basically the epitome of wealth. That's what the American people have convinced themselves of. Donald Trump is going to make the stock market go up. Donald Trump is going to make Bitcoin go up. Donald Trump is going to make the Russell 2000 go up. This man is here with his magic wand. He's going to wave the magic wand and asset prices are going to fly. I'm not waiting. I'm going to buy today and let Donald Trump be Donald Trump. Regardless of what the data says, which you and I have covered extensively, that the stock market goes up under every president, that actually the two best performing president stock markets in the last 50 years were Democrats, right? All these different data, it doesn't matter. Narratives matter. And the narrative is that Donald Trump's going to make that stock market go up. Now, the beauty of that narrative is it's true. He is going to make the stock market go up, right? He is going to make Bitcoin go up. I would argue Bitcoin did pretty good under Biden. Bitcoin did pretty good under Trump the first time. Bitcoin did pretty good under Obama. The stock market did excellent under Biden as well. It's not about the president. It's about the structure of the market. It's about the liquidity cycle. It's about the devaluation of the currency and the national debt and all these other kind of economic things. But it doesn't matter because nobody cares about facts, figures, data, charts, and graphs. What they want is they want a face. And there's nobody greater in the world at taking that sentiment of all of that structural, smart, sophisticated analysis and saying, look at my hair, look at my dances, listen to the YMCA, and we're going higher. And he's figured it out. And so regardless of whether he's actually driving it or not, he's getting ascribed the benefit of being the guy. And what I find so fascinating is if you put a president in the White House who measures the economic health of America by the stock market, it's going higher. The guy's not going to let it go down. And so I actually think the bigger question is not, is the stock market going higher? Is Bitcoin going higher? All that. Of course it's going higher. It's what is the ancillary damage that is going to be needed to be created in order to make that happen. Now, what's fascinating is that DOGE, Department of Government Efficiency, they're saying we're going to slash all this spending, but we're also going to pop the stock market. We're going to pop Bitcoin. We're going to do all this stuff. Usually you would say if stock market goes up, it's because we're spending a lot. It's because we're devaluing the currency. But what's fascinating to me is they're trying to do both. If they pull this off, just put them up there. I don't know, whether 4 or 5 guys on Mount Rushmore, move some over, put the 6th one. We never had a president in my lifetime that's been able to drive asset prices, not add to the national debt, and cut spending. It's a trifecta. No one's been able to do it. The last time we had a balanced budget was in 2000. And guess what happened? Stocks crashed in the dot-com bubble, right? And so when you look at this, you say to yourself, like, it's incredibly difficult to do this. The odds are stacked against them, right? There's a lot of campaign promises, all this bullshit, whatever. If you are a betting man or woman, you have to bet against them, right? In the sense of just the odds are against them. But if you said, what do you need to do to pull this off? You need somebody who can buck the system. Okay, you got Trump. You need somebody who has immense attention to detail and just chaotic management. Musk. So you got Trump and Elon. Then you need an outsized number of the smartest people in the country to come work a la Manhattan Project to cut spending. Doge. And then you need investors who don't look at data but listen to narratives, retail. And you start to line all this up and you say, you know what? This may work. I don't know if it's going to work. I'm along for the ride like everybody else. But they got all the ingredients. Now we got to see, is Trump really a good chef or not? Right? You know, you ever watch the chef shows? And everyone starts with the same ingredients. Pretty good. But somebody's going to come out with a 5-star meal. Somebody's going to come out with, something you want to throw away. And so which one is Trump? We're going to find out.
I think markets very much believe he's going to be great for the market because the amount of risk that investors are taking on is, the leveraged ETF exposure is at an all-time high right now. And there was a consumer confidence survey that showed 56% of respondents expect stocks to go up in the next 12 months. And that's also a record high. To me, it seems like there are a lot of risks that investors have suddenly chosen to ignore. And I know the market is this all-knowing thing that prices in everything, but it does feel like, from my perspective, that risks are being very much shrugged off right now.
There's no risk anymore. There's no risk. Right. And I'm not saying that's what the market's saying. I'm telling you there's no risk because the Federal Reserve will bail you out. The Federal Reserve and the OCC and the various banking oversight committees and the politicians, they bailed you out when the banks failed. You think they're not going to bail you out when the stock market goes down? They've outlawed bear markets. We had a recession and they refused to call it a recession in 2022. There is no risk. And so I actually would argue the younger generation is smarter than the older generation. Now, when I say there's no risk, it doesn't mean that there's no risk in the sense of the market can't go down. It just means that if you're a young person, it's going to recover fast enough where it doesn't matter. Do you remember the 2020 market crash? Did it matter? Nope. All you had to do was not sell. And it was like you just woke up one day, had a bad nightmare the night before, went to work, came home, forgot about it, bam, ready to rock and roll. Global pandemic locked you in your house. It literally didn't matter. There was a study done. You know who sold in 2020? The bottom of the market? All the boomers. Why were they selling? They went through 2008, 2009. They remember it took years to recover. They were scared. They said, I'll take the 20% haircut. Just give me my money. Young people weren't selling. Young people are doing the opposite. Stocks are down. Let me start buying. No sports on TV. Let me start gambling over here. This is a market. And so that's what I think ends up happening is 2022. Stocks crashed. Crypto crashed. Think about if you are a 25-year-old, you came out of school 2020, 2021, maybe 2022. Let's say 2021. At the peak of the market, you came out of school, got your little first paycheck. Woo! What do I do with this? Let me invest it in the market. Okay, what should I buy? I don't know. I don't got a big brain. Let me buy some stocks. Let me buy some Bitcoin. Okay. 2022, you just get punched in the face. Some stocks were down 80, 90%. I think that Shopify was down something like 70 to 90%. Real companies were down looking like shitcoins. Bitcoin was down 69,000, 16,000. That sucks. If you just held, you're back to all-time highs. You pointed out recently the stock market hit 53 new all-time highs this year. Nobody cares about 2022. And that's what young people realized, is that the young people are actually better positioned to weather the storm of volatility than the older generation because they got crypto. They've seen this. You tell me one person in the stock market that bought a stock, it rode up hundreds of percent, it dropped 80%, and then it went 5x from there, and they didn't sell. Some smart ass will tell me, I know my uncle did that or my cousin. Okay, cool. What if I told you 1 out of every 2 Bitcoin in the market did that? 50% of the circulating supply hasn't moved in 2 years. It's crazy what a large percentage of this industry. So I wrote at 2021, I believe it was, or maybe the beginning of 2022. There's an investor who I'm not going to say, was yelling and screaming about the market top, blah, 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 whatever. And I said, it don't matter. This is the generation of volatility. They have stronger hands than you do. Because when Bitcoin went from $8,000 in the halving of 2020 to $69,000, along the way, it drew down 30%, I think 5 or 6 times. That type of volatility, they didn't sell. And then it dropped 80%. They still didn't sell. It went up 500%. They still didn't sell. Volatility doesn't scare them. They want the volatility. Half of them are sports gambling. The other half are buying whatever crazy AI coins. Another half of them are buying meme coins. And the last half of them are out here just speculating on whatever stock names. And somebody will say that's 4 halves. That's the type of math that they can do. Is that it doesn't matter what the math is. They're just riding with vibes. But we live in an economy where actually that works. How do you explain an economy where there are people, there's somebody who works with us, somebody that I know told me recently, they went from, call it $10,000 in their portfolio to $250,000 in 2 months. Outperformed every hedge fund on Wall Street. Now they're doing it with a much smaller amount of money, no risk, all the things, right? How many people know that person, heard that story, and just sat on their hands and said, I ain't going to do nothing different? Come on. We're dealing with people in their 20s. They say, oh, you could do it. You're not that smart. I'm way smarter than you are. Let me get some shekels out of my pocket. Let me go see what I could do over here. Let me cook, right? Give me 2 months. Let me come back and see what I can do. But that's what's happening. And so I just think that it's this crazy world where the Wall Street people are yelling and screaming and they keep saying to themselves over and over again, that's not normal. That's not normal. That's not normal. I literally, if I had to count, could probably count, definitely with 50, maybe 100 people I know who have a similar story where they started with a little bit of money. They started investing. Now it's a lot of money. And whatever that is, some people started with a couple $100. Now it's worth tens of thousands of dollars. Some people started with $10,000. Now it's worth hundreds of thousands of dollars. Some people bought an asset, put 50 grand in, and now it's worth $1 million. But again, you say that's not normal. It is normal for this generation because they constantly see it everywhere they look and they start to allocate. And so the question becomes, if this is going to continue, when the market goes down, what will convince them to sell? I don't know. How do you convince someone to sell who didn't do any fundamental analysis? They just have been trained. Just hold it. Just wait. Shit's coming back.
So the question that comes to my mind when you bring all of that up, this massive risk appetite, what breaks when suddenly the paradigm shifts maybe back to what it once was?
There's no going back. There's no going back because the Fed broke the market. The paradigm did break. But there's no doctor. Nobody shows up and puts the patient back together. It's broken. We're in a new world. But the new world doesn't mean that you can't win, do well, etc. by using the old strategy. A value investor is simply somebody who goes, they buy something for less than it's worth. That's a good strategy. That will always be a good strategy. Doesn't matter what the market is, right? Bill Miller, his forever was, criticized. You're not a value investor anymore. You're buying Amazon, and Amazon's not a value investment. He's like, no, I'm buying something for less than it's worth. Of course, it's a value investment, right? So that strategy is not going away. What it is introduced to the world, though, is this new thing. And this new thing, everyone is pointing at and saying that's speculation. No, what these kids are doing is they're allocating capital in a full risk-on environment because they understand that there's a safety net now. So if I told you, if you allocate, and throughout history this has been true, if you allocate to the stock market and hold for 20 years, it's never been lower 20 years later. Never. Every time it drops, you should buy more. Duh. So the safety net was a 20-year safety net. But what if I told you that now it's not 20 years? What if it's 5 years? With Bitcoin, if you buy and you hold it for 4 years, never in history have you lost money. Compressing those timelines. The boomers had 20. The millennials had 10. Gen Z has 4 years. Buy and hold for 4 years, you're always up. If assets go down, you just wait. You're 25 years old. Before you hit 30, you're back. You're bam, let's roll. Just buy more. That is literally what is happening, is that information is moving faster. Capital is moving faster. Timelines are getting compressed. But it all goes back to the dollar has got to get devalued. And these things are spreading in a way that we've never seen before. Because historically, if a hedge fund manager bought a stock, there's 3 things you got to do to make money as a hedge fund manager. You got to buy a good stock. You got to go tell all your friends that they should buy the stock after you've already put your position on. And then you got to sell the stock. But that is how these guys have made money forever. And if you ever listen to interviews with the greats or with the Joe Blow random hedge fund manager on a podcast no one listens to, they will all tell you the same thing. They got an idea from a friend or they told their idea to a friend. But it's this whole game of like, hey, once I know, then I got to tell the world, right? Get long and get loud. These things have been going around forever. Now what's happening is these kids are saying to themselves, I don't need to buy something and go tell my friends. I just buy the things where word of mouth is already spreading. And here we go. Bitcoin, what financial asset has more word of mouth than Bitcoin? You don't need to tell your friends. The world's already doing it for you. Just buy it, right? If you look, NVIDIA benefited from this, right? Was people were buying and they were going around the world to AI is going to change the world. AI is going to change the world, blah, blah, whatever. There's a very strong argument, and you've covered this very well. NVIDIA went up because of ChatGPT, right? So like the word of mouth of ChatGPT then convinced people to go buy NVIDIA. So we're now entering this world where people are allocating capital based on narratives, But like, is NVIDIA overvalued or undervalued? If you went and you asked all the NVIDIA shareholders, what percentage you think could actually break down their opinion? Not even if they're right or not, just could they explain how they think about it? Very few. The smart Wall Street people, sure, they got it, discounted cash flow models, blah, 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 whatever. Nobody.
My sense is that if timelines are compressing so much that you can make a profit, there's got to be, that's probably tied to like the TikTok brain where everything has to be immediate. And I wonder, there's probably going to be a lot less capital discipline over the years, right? Because if everyone's used to turning profit so quickly on their investments, that probably shortens your ability to stay in the market. Maybe that there's got to be some psychological downside here.
Today's episode is brought to you by Meanwhile. Meanwhile is the world's first licensed and regulated life insurance company built for the Bitcoin economy. Operating on the Bitcoin standard, they do everything in Bitcoin. You pay in Bitcoin. They pay claims to your family in Bitcoin. You take out policy loans entirely in Bitcoin when you need liquidity. Meanwhile, Bitcoin life insurance has redefined what it means to hodl. Protect your family from life's uncertainty in a broken financial system. Build intergenerational Bitcoin wealth while the cost of living skyrockets in dollar terms. Get all the tax and legal benefits of life insurance now in Bitcoin. They are actively binding policies today. Whether you are a long-term Bitcoiner or are just considering it for the first time, a Bitcoin whole life policy could make sense for your wealth plan. Visit their website, meanwhile.bm, to join the waitlist and to learn more about the world's first Bitcoin life insurer. Again, that's meanwhile.bm. Go check them out today.
So what's interesting, and I don't have a good way yet to fully flesh this out, but if you go talk to some of the best hedge fund managers in the world, they'll say to you, if I buy it, it goes down, I sell it, right? Paul Tudor Jones, a number of people. And the whole thing is just like, don't lose. Pretty simple. Buy something, it goes down, sell it. Buy it, it goes up, wait, right? Like, whatever. That's pretty short-term oriented. That's like a day. Wall Street, over 50% of all options are now zero-day options. I buy something in the morning betting on what the price is going to be at the end of the day. This is not just a Gen Z thing. This is a pervasive thing across the economy. My hunch is people have been doing this forever. It's just that now they got access to more information and they don't got to call a stockbroker. So they can do it themselves. They can go press the buttons rather than call the guy to press the buttons. And so what that does is it increases the velocity, the volume, the frequency, etc. Compresses timeframes. I would ask, I had a doctor recently call me who I've worked with a long time, been an investor of ours. He, amazing man, amazing. World-class at his job. He owns some businesses. Like, this guy's the real deal. And he goes, hey, Pomp, Bitcoin's looking pretty good. So yeah, he invested in a fund. We bought some Bitcoins, up huge. You can make a lot of money. Cool. He says, you called me to let me do a victory lap? Like, this is an awesome call. I said, yeah, looks good so far. Let's see what happens, blah, blah, whatever. He goes, what do you think about MicroStrategy? So what do you know about MicroStrategy, right? Said, here's my thoughts, whatever. He goes, I made a lot of money on options and MicroStrategy. I said, what did you say? Repeat that, right? It's like in the movie where the record scratches and everyone turns and looks. And he said, yeah, I made a lot of money in options trading MicroStrategy. So I said, hold on a second here. A doctor outside of a major metro is trading options on MicroStrategy. This guy's incredibly intelligent, very successful, everything. If he's doing it, what do you think everyone else is doing, right? Like, obviously they're doing the same shit. So you start to look at it and you say, oh, wait a second. This is something where if you remove risk from the market, even if you say, okay, not 100% of risk, 90% of risk has been removed, people push out on the risk curve. And so what has Wall Street figured out? Wall Street's to blame for this too. They've just created better mousetraps, shiny toys, zero-day options. Zero-day options is incredible. Zero-day options is something that Las Vegas wishes they created. But Wall Street figured it out. So you start to realize, like, wait a second here. We are just realizing that risk equals return because risk has a safety net. So I have positioned or posed the question to some of my friends, some of my smartest friends. Name 5 investments you could buy today that you'll lose money on over the next decade. Forget about trying to make money. Try to lose money. Name 5 investments you could make. Very hard exercise. Oil? I don't know. Gold? It's going up. Bitcoin? It's going up. Stocks in general? Going up. Bonds? Probably one. But like there's like 2 or 3 like kind of no-brainer. Once you get past that, it's like kind of hard to pick number 4 and 5. And you get into like single name stocks. Right? So like if you look at them from an asset class standpoint, it's very hard to pick. Well, how could you lose money? Like intentionally lose the money. So when you start to say that, you're like, oh, wait a second here. Like actually people are just getting long are the smart ones because they realize that from a probability standpoint, asset prices are going up, not down, especially over 10 years. And that's just not how people have thought previously. Everyone has been very defensive, diversification. I've got to be smart, only buy stocks that are valued less, blah, blah, whatever. That don't seem to be the world that we live in right now. Now, maybe it changes, but it's hard to see how that happens.
If we follow that line of thinking that stocks and asset prices will go up indefinitely, that sounds maybe like a bad thing macro-wise if the dollar is going to get devalued indefinitely.
Maybe. But you need liquidity in a economy. And so that's why they devalue the currency, right? Is the 2% inflation will convince people like, well, is that true if nobody actually even knows what inflation is? Half of the economy just holds cash. So what you're telling me only the rich people, are the ones who are spending the money? So there are some ramifications, but the counter argument to it is, well, the wealth effect. If, the S&P is up 27% this year. For every dollar invested, you got an extra quarter now. Okay. Where do you think that money's going? Some of it's going to stay in the market. Some of it's coming out. It's going to get spent. Very few people I know sell stocks to save. Right? Wealth that is generated in the market either morphs and evolves into other investments, but it stays invested, or it is taken out of the market and used for consumption. But how many people do you know that are selling their stocks to save money? There's the Warren Buffett's, whatever, but he's kind of like temporarily doing it because people think he thinks there's a market crash coming, whatever. But there's not that many. And so the wealth generation actually perpetuates higher prices because, hey, I bought the S&P, it's up 27%. Okay, well, you know what? That's a lot of S&P now. Let me sell a little bit of that. Let me go over here, buy this thing. And you know what? I already got the S&P. That seems to be doing pretty good. If it's going to go up 27% a year, like I don't need to buy, something safe and sound. What's the, what is that NVIDIA thing? Let me go, let me take a flyer. My doctor friend told me, this other stuff, like you start to speculate more because you feel like your nest egg is doing better than you expected. So you got a little extra. And there's a psychological. So like the whole like behavioral economics of what happens when the market broke is fascinating to the point where how many hedge funds have waved the white flag and said, I'm not going to short single name stocks anymore. Like we are at war with an insurgency. People don't think about it this way, but the short sellers are like the big mechanized, army showing up. They got their tanks, their, all their training. They got their beautiful uniforms on, all this shit. We're the big guys. We're the pros. There's kids with red bandanas on the internet wrapped around their head who are literally just buying stuff and talking on Reddit, blowing up hedge funds. And everyone just points to the GameStop thing. It's like this happens all over the market to the point where literally hedge funds by and large are saying we're not going to short single name stocks anymore. That's crazy. But is it because of the quote unquote insurgency, like the young kids, that whole story? It's a good narrative. It did happen a couple of times anecdotally. It's more likely though, because you're basically picking up pennies in front of a steamroller. You're shorting single names when they're devaluing a currency and pushing everything up. So sure, maybe you're right every now and then, but how many different assets could you and I point to and be like, that company's a horrible company? Stock price is up. That crypto coin is worthless. No one uses it for anything. It's up though. And so it goes back to this idea of traditional stock investors think of two things when they buy. How high could it go? And how much could I lose? The younger generation is buying assets that inherently have no answer to how much can I lose? There's no downside protection. It is a 1x downside. A company has assets, cash flows, contracts, all this stuff. There's liquidation value. And so all these super smart investors are like, oh, we buy the bonds that are, there's more hard assets underneath that could, if liquidated, we could recover 100% of our money. There's kids on the internet like, shut up, old guy. I'm buying a thing that literally is not tied to anything. It's imaginary internet money. But it's up 40% in November. Traditional guys will say, that's crazy. You guys are idiots. Time will come. But they've been saying that for 15 years. Right? And so it comes back to this idea of when risk gets degraded in a market and everything is structurally pushed up, should you actually be investing for what is the downside? Or should you be investing for how much can I make on the upside? And maybe the downside risk protection, which actually I do think a lot of the young people think about, is to build a portfolio. And what they're essentially doing is they're becoming venture type investors using liquid assets. And that's the part no one articulates, which is in a venture portfolio, you build a portfolio of assets. Majority of them go to zero, but the ones that work have an asymmetric payoff, and the winners pay for the losers. Stock investors think of it the opposite way. They historically think of their batting average. I want to make 10 good bets and eke out a little bit on each one, 10, 20, 30%. But if you go talk to the Stan Druckenmillers, what did he learn from George Soros, etc.? He'll say it's not about how often you're right. It's about how much you make when you're right. Venture investing, power laws, asymmetry. And so the young people have taken that mentality of venture investing and they're bringing it to these liquid markets. But that's actually how the best investors invest. And that's why they are drastically outperforming these traditional investors. And so you start to put all this together and you're like, maybe what's new is not actually new. It's just that they don't know how to articulate it, right? Because they got a red bandana around their head and they're yelling and screaming about, like take down the man. But they actually are employing some of the same investment strategies and tactics that, the Drucks, et cetera, of the world are.
What is a non-crypto asset that you see outperforming Bitcoin next year?
I think there's a lot of assets. I mean, just use in the month of November, I believe that Marathon and Hut 8 both outperformed Bitcoin. So Bitcoin was up like 40%. I think both of those were up like 70, 75%. Again, they're related, right? But public equities. I think MicroStrategy outperformed as well, if I remember correctly. So there's like public equities that are still related to the same industry. I think that there are always special situation stuff. If you think about something like there are companies that are heavily misunderstood in the public markets. Like one of the things, so let me give some context. For the first 15 years of my career or so, only focused on private market. Venture investing, then started to do some of the Bitcoin, crypto stuff, whatever. But like generally private market, not public equities. In the last 18 to 24 months, I've become much more interested in the public markets. And so 24 months ago, I'm like, probably like above average understanding of business and investing, zero experience in the public market. I worked for a public company and that was about as good as close to the public markets as I got. I'm fascinated by how inefficient the public market is. And you kind of know this because you see crypto, right? And like it's liquid market and whatever. It's crazy how there's not more money made in the public markets. Because when you look at these public market companies, like, I don't know, 25% of the companies just have no clue what they're doing. in terms of explaining it to people. But you dig under the hood and you're like, dude, this is a good business. This is a good product. Like what you just told me, understanding your business, is not even remotely close to what your website says. Right? And so it goes back to this idea of like, if you could wave a magic wand and clearly articulate what every company could do, 25%, maybe more, immediately get a stock boost. Right? And people just realize like, oh, wait a second. The thing that I thought was there is not actually what I thought. It's better than that. And they allocate. So I think there's a lot of that stuff going on. The beauty is that the young people in the liquid crypto market, they know how to communicate on the internet better than these larger companies. They also have the benefit of like, they don't have legal up their ass. Right. And so, I know public company CEOs who are like, oh, dude, I want to say X, and legal's like, no way. So there's some of that going on. So I think that that's a huge thing. And going to your question about like, what's going to outperform Bitcoin? It begs the question of like, what is Bitcoin's return going to be? Right. And so if I had to guess what majority of, if I polled all my friends, I would say that the quote unquote price predictions for like highest point in 2025 lands somewhere between 150 and 250. Some people think 150, some people 200, 175, 225, whatever, but somewhere in that range. So let's just take 200 as kind of like, some round number that's like around the middle of those two numbers. That's a double from here. So what you're really asking is like, what asset's going to go up more than double in 2025? I think there's a lot of assets. I don't want to name individual stocks, but like, yeah, that's not as big of a hurdle as people think, right? The question is, what's your confidence level? Confidence level of Bitcoin going higher from here for hundreds of millions of people is very high, right? So like that skews people to allocate there. And then the second question is, how much money can you put into it? So if you go and you find, a $50 million small cap public, like, sure, but what are you going to do? You're going to put $1 million, $2 million in max, right? And that's going to move the stock. With Bitcoin, you can put, unlimited money, billions of dollars in. Doesn't even blink, right? Think about this. I think that MicroStrategy has announced they've bought something like $6 billion, $7 billion in the last like 2.5 weeks. And the price is down.
It's crazy.
Right? So you're saying to yourself like, all right, price performance, there's a ton of options. But I actually think that when you overlay price performance plus level of confidence, plus can you deploy $1 billion into it? Very, very small, right? Because you basically got to have something that doubles, that you have high confidence in, and that you can put $1 billion in. Hedge fund managers paid millions of dollars a year to go find those. They don't do a great job, but they're trying. And I think it's not because a lack of effort or intelligence. I think it's just like, again, go look back the last 12 months. How many things more than doubled that you could have put $1 billion in? Probably not that many. Right? If you took the whole stock market, maybe we should even do this analysis. Look at the whole stock market, what it went up more than 100%. And 12 months ago, you could have put $1 billion in without it being, material movement of the stock price. So it's just, how many of those opportunities ever exist? Not that many.
Pomp, thank you for your time.
Thanks for doing this.